By the end of this video, you will have a complete understanding on how to trade natural gas and how to use it to effectively grow your account. And of course, I am going to be starting from the bottom so that I don't lose anybody, but make sure to watch the entirety of this video so that you know exactly what you're doing. We're going to be going over how to gauge this supply and demand when it comes to the weekly natural gas report, how to read it, and of course, how to draw a conclusion as to whether natural gas is going to go up or down. And we are going to be going over exactly how colder weather corresponds to higher consumption of natural gas and how that corresponds to higher demand. For example, basic economics tells us that when we have lower supply and higher demand, that prices are going to go up, and that can cause upward speculation when it comes to natural gas. And of course, we're also going to be walking you through how to find concrete entry and exit points, and this is all part of this wonderful video. And the only thing that I ask in return for this video is that you hit that ravishing like button. Okay, so to start, when I say trade natural gas, we're talking about trading UGAZ and DGAZ. These essentially multiply the movements of U and G, which essentially moves up and down with the prices of natural gas. The beauty of this is that we can trade off the multiplied upward movements in natural gas with UGAZ, and then we can flip the switch and trade the pushback with DGAZ. Of course, folks, when UGAZ goes up, DGAZ goes down, and vice versa. This is inverse ETFs and ETNs 101. Okay, but why? Why do we actually like these? Well, we like UGAZ and DGAZ because their frequent movements are a hidden gem that allows us traders to have extra consistency. We love consistency. And it's even better when it's pointing in one clear direction. And as fall and winter approach, natural gas becomes more bullish. And this is intuitive. If we have colder weather, that means more heating, that means more usage of natural gas, and all of a sudden we have a more bullish price on natural gas. There are, of course, other uses of natural gas besides just heating, but because natural gas is more used during the fall and the winter months, that means that some of the best price action for them is going to take place during cold months and immediately prior to them. But the key with this is the actual speculation that goes along with it. We love speculation. Natural gas prices that are trading are actually based more on the speculative future as compared to just the actual current value. Natural gas prices and really any sort of prices are all based on speculative value. People are trying to get ahead of the game and guess where the prices are going to go so that they can make a profit now, but that causes a run up in the present. But what does speculation actually mean in this context? Well, it is to say that, for example, if substantial reports come out that next month is going to be the coldest month on winter, I'm a cold penguin, folks. Brr. But if reports come out that weather is going to be extra cold in the next month, all of a sudden people are like, oh, hey, natural gas is going to go up, and they speculate, and then that causes prices to run up now, even though it's not colder now, it's just predictably colder in the future. And you could say, but Charlie, hey, if we know that weather is going to get colder and natural gas is going to run up every fall and winter, what is to stop us from just buying in at say the end of summer when we're at the lows and then just sell out at the end of winter when we're at the highs, or in the middle of winter when we're at the highs? Well, the big reason is that UGAZ and DGAZ are leveraged and thus they decay over time. And eventually they always get to a point where they're trading so low that they get reverse split into a higher share value. The problem is that leveraged financial instruments have a decay effect. That happens when you multiply. I did the math on this in an earlier video, but when you multiply movements, this is something that happens. But anyways, this works together to make it pointless for you to hold these positions long term, because the more you hold them, the more they decay. It's a long-term deprecating factor. You could buy them at the end of summer, but there are a number of different deprecating factors that could contribute to eating into your gains. If you're doing it correctly and you have a concrete plan, you could hypothetically hold for the medium term, but I do not do this personally because of the simple fact that I do not make a habit of holding positions in things that have deprecating factors that are eating away at my chances of profitability over the long run. And in fact, in ZipTrader U, I have a section where I talk about my golden rules of trading ETFs and ETNs, and one of the ones that I talk about is not holding them for long periods of time because of the decay effect. But when it actually comes down to trading UGAZ and DGAZ, it's actually pretty straightforward. With basic technical analysis techniques, which we teach all throughout this channel, we can spot periods of upward strength, buy in at confirmation, right, the price strength over the blue SMA line, and then sell out at validation. Remember, the wider the gap between the SMA and the price action, the more price action there is, the more price strength there is, and the closer the gap, the less price strength there is. Pretty intuitive, ZipTrader 101. But at the end of the day, trading is about stacking your odds of success, and the big pro about trading natural gas is that it is prone to news catalysts in the form of weekly natural gas reports. It's really quite a beautiful thing, folks. Okay, so the natural gas report comes out every week and it's posted on this EIA website. I'll link to the website below for folks who don't know how to use Google. And once you've opened it, it'll tell you when the next one is coming out, but usually it happens around Thursday. Sometimes it happens on Friday. And it can look a little bit intimidating when you first look at it, but it's actually very simple and you'll see in a second. And the way that this natural gas report is set up is that we see the storage of gas, like how much natural gas are we storing throughout the year so that we can use it and utilize it in the months that we need it. Depending on what time of the year you were looking at this, you'll see different numbers. During early fall, we'll start with high numbers of supply since we stored it all year, and then it'll slowly deplete during cold months. The faster the supply is getting depleted, the more likely we are to have a crunch of supply. In order to tell if something is getting depleted faster than normal, you should be looking at its historical comparisons. At this point in time, when I shot this video, we are actually still increasing supply. How can we tell? Well, we can see that by comparing last week's report to this week's report, we can see that we gained in supply overall. This number is bigger than that number. Math 101. And that's actually pretty consistent with prior years where we gained overall as well during this time period. In fact, we have more supply this year than we did last year and on average over the last 5 years. But during January, when I made the last natural gas video, we were in a period of massive net outflow, which is normal for winter months because we're using more natural gas. But the outflow at that point, you could see it's abnormal because that was a lot faster than average and the overall storage was a lot lower than average during prior years during that same exact time period. Since the outflow was a lot higher, we knew that there was a higher demand, and thus that influences the share price. And in this way, we can actually go ahead and compare the supply and the demand from this year to prior years and see exactly if it's increasing or decreasing and how that's going to factor into the share price. And this chart below actually gives a great explanation for visual learners. You can see that during these months of the year, gas is stored, and then during these parts, it is depleted. You could think of this side as the area where we're stacking up supply. Yes, we're still using natural gas during this period, but we're stacking up way more than we're using. And during this part of the year, we are stacking up demand. There's more demand. The demand is taking away from the stacked up supply. That's why it goes up and down. This is the storage, right? This graph shows storage. We have a lot of storage, and then we have lower storage. And it goes back and forth throughout the year based on the needs of the country. But the thing is that everybody knows that this happens, right? So that's why it's not so advantageous of us to just buy in randomly knowing that it's going to be depleted and it's going to go up during other times of the year. People already factor this into the share price because everybody knows about it. So what we're looking for is breaks of expectation. Are we going above or below our supply and demand? Abnormal depleting or abnormal extra storage will affect the price of natural gas, and this is what we see. And at this point in the video, we've only touched on supply and the implications on demand. But there are other things to keep in mind. Government announcements and weather predictions also play a huge role in natural gas prices. When there are widespread predictions of switching over to natural gas, we see bolsters in the share price. When cold weather is predicted, we see bolsters in the share price. And a lot of this is overhyped, as we talk about a lot. A lot of these speculations are overhyped. And that is why in these months leading up to massive demand, we have been seeing price increases even though our supply is slightly larger than usual. And the biggest spikes in usage historically happen around these months. And if we have abnormal depletion in one way or the other, we know that we have an elevating factor in either UGAZ and DGAZ. If we can identify which one has the elevating factor, we can trade off it and use that to grow our account. So switching back over to UGAZ and DGAZ, how exactly do you know which of the inverse to trade on any given day? Well, besides your research using the weekly natural gas report, my general rule of thumb is to focus on the partner that is in an upward direction. And I go into depth on how to choose a partner in the ZipTrader U course, but this can all be learned on your own through due diligence. For example, if you're looking to take a position in natural gas and UGAZ is in an upward direction, then it makes the most sense to trade that one. If it's DGAZ, then trade DGAZ. If the direction of the stock is going back and forth in a short time span, that means that the direction is uncertain, and we hate uncertain price direction. And thus, you should wait for a sustained direction to choose which side to trade. Remember, when it comes to trading, we're stacking elevating or deprecating factors. When you have uncertain price strength, how do you know which way it's going, right? So you don't know if it's an elevating or a deprecating factor. So just assume it's a deprecating factor and move on until you have an elevating factor. But it is also important to identify the longer trend from the last few weekly gas reports. For example, when looking at the last 10 days, we can see UGAZ broke into an upward direction, grew in directional strength, tested a downward direction, rejected it, and then continued growing upward. This means UGAZ is currently in a clear upward direction. But again, trading is nothing but a probability game. It's kind of like structured gambling, but you want to make yourself the house. And how does the house always win? Well, they always win by stacking their elevating factors and minimizing their deprecating factors. And stacking probabilities in your favor means that over the long run, you're going to come out ahead if you practice good trading techniques. But one of the things that I always say is it doesn't matter how great you are at finding good positions. If you suck at timing, you're not going to be able to take advantage of that. So in order to be better at timing, you're going to need to make sure that you're better at finding and waiting for confirmation, selling out at validation, and measuring your price strength over the SMA line. Are you in an upward direction? Are you below fair value? Where are you getting in, right? And using clear elevating factors to rank just how good your position is. And of course, you need to be careful with UGAZ and DGAZ. I would never recommend holding them for long periods of time because they do have that long-term decay. But you should check multiple intervals. I like to trade it on the 1 minute, the 3 minute, and the 5 minute chart, and sometimes on the 10-minute chart. And the reason is because when you do that, all of a sudden you open yourself up to different opportunities in terms of validation and confirmation points, and in terms of different patterns that you can see. And one of the things that I will mention is the longer the interval, the more conservative you're being in terms of spotting an entry point at confirmation. Because if you have a longer term, a 10-minute confirmation point, a 10-minute show of price strength, all of a sudden it's like, hey, that's more powerful than a 1 minute show of price strength, because a 1 minute show of price strength just happened over 1 minute, but one held for 10 minutes. So that obviously means more. But at the end of the day, those positions are going to take longer versus just the one. Those are more aggressive. You can be really aggressive with these positions and catch a lot more of the move if you use the 1 minute. But using the 10 minute is going to be more conservative. So you need to choose what works best for you. And of course, always make sure to paper trade and practice viciously. You need to viciously practice these strategies before actually going into the market. If you're not being profitable trading with fake money, never think that you'll be profitable trading with real money. And if you find yourself all of a sudden just encouraged to blindly jump in, guns blaring, and start trading, and all of a sudden you start making profit, don't think that you're automatically a good trader. Remember, trading is a probability game, so it's not unlikely that if you make a random trade that you'll come out ahead on that one trade. But it's very unlikely that you'll be able to do that consistently over the long run. So folks, please don't do that. Anyways, folks, if you need more help stepping up your trading and growing your account using different methods presented in this video, we have tons and tons of free resources across ZipTrader, the ZipTrader YouTube channel, and of course in our free ZipTrader Circle Facebook group. And for those of you who would like to learn in a structured environment and would like the opportunity to work closer with me, we also have ZipTrader U, which is our premium course with premium content. If you have any questions about that or anything else presented in this video, you can go ahead and comment below and I'll answer them all. Have a great day, and I'll see you in the next video.